Good morning, everyone. We'll just give it another minute or two. We're still waiting for quite a few attendees. All right, we might just make a start. Good morning, everyone. Thanks for joining us at the table this morning. I'm Juliet Allen and I work here at Farm Focus in the education team. We are excited to be delivering this online conference for you and hope to make this part of a wider series to engage with our professionals. Today we are joined by Lawrence Field and Geordie McCallum. They are here to share their expertise with us. This is a Zoom webinar forum, so please feel free to type your questions in the Q&A throughout the session and we will respond to them right at the end. This will be questions for Geordie and Lawrence about their content today, so if you have any technical support questions for Farm Focus, can you please direct them to our support team. The whole session will take about an hour and we will be around another half hour at the end to answer any questions. Currently, we have 231 certified accountants with 17 silver partners, 6 gold and 17 platinum partners. So a big thank you to everyone who's taken that time to get certified. We really appreciate it. Our intent for today is to provide more value to our accountants working with Farm Focus. And today we're connecting with industry experts to understand more about what we can do to elevate our conversations with our farmers and to add value at every interaction. So to introduce our panel today, first up we will have Lawrence Field. Lawrence is a chartered accountant who ran a specialist farm accountancy business here in Masterton. He now concentrates on facilitation and training work around the country and works with various industry groups. Lawrence will be sharing his knowledge on how the workflow of Farm Focus can encourage a better level of accuracy and timeliness and to help better utilise your customer meeting time. We will then have Geordie McCallum join us. Geordie is the Director of Wairarapa Property Consultants in Masterton and has been part of the team there for the past 6 years. And this follows a 14-year career in rural banking. Geordie's experience brings a well-rounded view of what is needed to be ready to take your opportunities. And he will share some key pointers with us and talk us through some of the reports. So I'll hand over to Lawrence.
Thanks, Juliet. Hey, really good to be with you all today. I see we've got 44 participants on the webinar. I'm going to cover three key points today. The first one is around workflow, using the Farm Focus workflow. The second one is around livestock, which we all know can be a challenge. And the third one is speaking the same language. So I think one of the key differences with Focus, or one of the key opportunities, is around this farmer workflow. I was always a big fan of records folders and used to supply records folders to try and get clients to kind of, corral all their information and to make it easier for us. workflow and the invoice scanner and things basically replaces a lot of that. So you can see on the screen, what could be a typical workflow. And I know I was down doing a farm focus workshop in Cheviot, and I asked, how were people handling their invoices? And there was a huge range within the room, but for some people, they were practically going paperless. So as you can see from the workflow, every time we make a purchase, we get an invoice. We'll either get that in the mail, or more and more it's coming by email. So easy to set up the invoice scanner and just forward all those invoices directly to Focus. If you have got a paper copy, then you can either scan it or even take a photo of it, and again forward it on the email to your own particular mailbox. And then they're all sitting in there ready to go in Focus. Step 4 there, some people are actually using that to pay their accounts, their bill payments. That's an option, but what it means is that we've essentially got one source of truth. So as accountants, we're I'll say passionate rather than anal. We're particular about our source documents, and it means that they are all in one place. So for those clients in Cheviot, some of them were, as soon as the invoice was coming in, they were forwarding it through to the invoice scanner, and then they were deleting the invoice. So everything was stored within Focus. It means, as accountants, if you're say preparing GST returns for clients, but perhaps they're doing the data entry, you might even be just checking it, you're going to reduce your queries hugely, because whether it's an insurance invoice, a trade-in on a motorbike or whatever, you'll have all the information there sitting beside the actual transaction. And even when it comes to annual accounts, the information should all be there, again, for any of those things, which will reduce your queries. And when you think about it, then essentially you could start picking up, from the accountant's workflow point of view, you could start picking up that job anytime after the end of the financial year. If farmers are using this workflow, what it means is that they're coding from the invoice rather than the transaction, which I think means we get way more accurate coding. And of course, there's the ability to set up invoice coding rules, which will automate that process going into the future. We're going to touch on livestock, but again, if you ever got any queries with livestock purchases or sales, then if those invoices are attached to the transaction, it's a really quick and easy way to check them. At the moment, the easiest way to attach an income invoice, so a kill sheet, is just to attach it to the transaction. All those source documents there will be ready at the end of the year. The other thing I think that I really like about the workflow process is that for farmers, it allows them to use a more continuous process. So we've all dealt with people who will be doing their GST, on the 26th or 27th or 28th of the month, and for some people, they're only in the program every second month. I think by scanning through the invoices and seeing them there and coding them, it becomes a more continuous process, and it means it's a whole lot easier to keep up to date. Okay, we'll move through, Juliet, to livestock. I've run a lot of workshops around the country, financial skills and understanding your farming business. And inevitably, one of the things that people struggle with is stock reconciliations and keeping track of stock. Where we start is explaining to people or helping farmers to understand that because stock is our inventory, then it has an impact on profit. When I ask that question, a lot of people obviously understand that an increase in stock means more assets and it has an impact on the balance sheet. But really understanding why stock has an impact on profit can be quite a revelation. And there are still lots of people out there who, perhaps with Cash Manager Rural, were using it as a cash book, were doing their GST, and the stock reconciliation was never used. And that, to me, is a real lost opportunity. I remember talking to a consultant who would go out for a half-day visit on farm, wanting to address opportunities and things like that. And they could spend the first hour or two sorting out the stock reconciliation. So I think the opportunity is for accountants to coach and help our clients to really get on top of this. So given that we need these stock adjustments to get an accurate picture of what's going on, then we need to enter the values. And there's really good help topics on this. So in setup production, we need to enter the values, and that will then bring those adjustments through to the EFS report. Because as we know, without the stock adjustments, it's really just it's just a very simple cash flow. If you're wanting to go the next step, and I think Geordie's going to touch on this, and you're actually wanting Farm Focus to give you a sense of your production, especially in the sheep and beef sector, the RMPP encouraged farmers to calculate their net production. Then again, you need to enter your opening and closing weights, and that will give you that accurate production figure. The next step, I think, is about encouraging a culture of counting stock. So when I've worked with young shepherds and I've asked them, how often do you do a stock reconciliation? Interestingly, the ones that work on large farms or work for a corporate, they will tell me that part of their job description is that they must do a monthly stock reconciliation. And what we've got to make sure is that the figures we've got in Focus match the reality out on the farm. So I think this is about developing a culture on farm that whenever the stock comes through the yards, we're doing tallies and we're comparing that. So that's that second 2 points down there. Every month, check your stock on hand in the working plan. That column down the middle, stock on hand, should be the accurate tally of what you've got. And I say to farmers, when you think about it, you've got 12 opportunities to get your stock reconciliation right, not just, a sort of fudge factor at the end of the year. One of the recent enhancements with Focus is that when you're looking at the working plan and you've got actuals and then you've got the plan ahead, you can now enter your births and deaths straight into the actual side, rather than having to go up through the livestock. So, and whenever you look at a stock reconciliation, if you see negative numbers, say there's a whole lot of negative numbers in lamb sales, it's because the births haven't been entered. They might have been entered in the budget, but they haven't been entered in actuals. So that's a real trick and something that needs working on. Again, I think as accountants, we have a real role to help educate our clients. And one of the things when I'm talking about stock reconciliations is I say, remember the golden rule. Whether you're budgeting for a head or you're coding an actual transaction, budget or code the animal to what they were at the start of the financial year. And if you do that, then you can't go wrong. And the challenge is that I think often on farm, what we have is a disconnect between the person that's out on the farm doing the work and what they're calling the stock, and the person is the bookkeeper. And so I describe that as being a translator. The one that's doing the bookkeeping has to translate what they might be calling the stock out on the farm and think back to what they were at the start of the financial year. Juliet, do you want to just bring up that PDF of this is for a sheep example. So I've just put this together as a little example, say, for sheep, because I've asked farmers, when do you, out on farm, when do you change the name? Like, when do your ewe hoggets when do you start calling them two-tooths? When do you perhaps mob up the two-tooths with the ewes? And of course it varies. There's no right or wrong answer. For a lot of people, it now might be around weaning. It could be later on. It's the same issue with your ewe lambs. If you're mating hoggets, you're mating hoggets at 8 months, whenever it is in the first autumn, then we're calling those ewe lambs, but you're mating the hoggets. So my blue lines are on there, what we might be calling them, what farmers might be calling them on farm. But the red lines is, as we know, what we must do with our stock reconciliation. So that's where the translating comes into play. The person doing the coding must think back to what the stock were at the start of the financial year. And again, there's some good tutorials on this on the help section. The two most common mistakes that I see is lambs that are carried over balance date. So some people call them trade lambs, or autumn trade lambs, that sort of thing. They're sold before they cut their teeth. In the springtime, often the invoice will say lambs. What were they at the 1st of July? They were hoggets. So they must be coded to trade hoggets or sale hoggets. And the other common mistake I find is around sort of 22 month cattle. They could well kill out at 250, 260 kilos, something like that. And most people will think of them as R2s. What were they at the start of the year? They were R1s. So that's the other thing. The other thing that I think is a real help in terms of our interactions with clients is being really clear that this year's closing numbers equals next year's opening. So, and I think most farmers, when I ask them, where do you get your opening numbers from? They'll say, oh, last year's closing. And they might go to the accounts and look at that. I think we need to be clear when we're talking about closing numbers, and I'd love us as an industry to be absolutely consistent on this, is that stock age just before midnight. So they age up just before midnight, so they close as a ewe hogget, and then they open as a ewe hogget. All we've done is flip over midnight. And therefore, we should never have lambs or calves in our closing numbers. And I think as accountants, if we can be consistent when we're asking people for their closing tallies, that what we want is the tallies that have been aged up, because that is what they are. When you look at the PDF, in a way, I say to people, it's already artificial. On farm, we might age them around weaning, around Christmas, in the summer. But from a stock reconciliation point of view, we're only aging them up at the end of the year. So that's just around the language. What it means is if we've got good, accurate tallies and good, accurate adjustments, then something like what Geordie's going to talk about, the EFS report, it means that it is an accurate estimate of our operating surplus. Okay, let's talk about talking the same language. Now, this is not intended as a criticism, but when I ask farmers, and I've spoken to somewhere around 1,500 farmers over the last few years around the country, and I ask them about their conversations with accountants, a not uncommon reaction is like this, that I think because we're doing this stuff all the time, the language that we use is familiar to us, but it's not necessarily well understood by clients, by farmers. And so if we're using farm focus as our kind of common language and cash is king, then farmers understand that. And I think that's a real advantage. I would use, if I've got my stock adjustments accurate, we would, any time after Christmas, that sort of February, March update, I try and do a budget. In terms of budget updates, when people ask me how often should we do that, I would say to them a minimum is say twice a year, in that in the springtime, once we've got our docking and calving tallies and we know where we're at, we can put that in. We know what our opening prices are. And then again, around February, March, we know how the summer's gone. We'll have an estimate of what our closing numbers might be. And of course, those two dates tie in with provisional tax as well. So once we've got those stock adjustments in there, then our operating surplus is approximately going to be close to our profit, isn't it? Okay, it's before depreciation and it's before accruals, but it means then that if you're looking at what is the profit likely to be, then you've got a good figure and the farmers can absolutely relate to it. Just again, coming back to the stock side and why entering the values is so important, that even if your clients' stock are mostly on herd scheme, I know in our part of the country there has been, and certainly in the Hawke's Bay, there's going to be quite a recovery from low drought numbers. So stock numbers are likely to be increasing, and therefore our adjustment, our change in inventory is going to be significant. And I'm predicting that the herd scheme numbers will be up when you look at livestock prices out there. Again, something that I think accountants can really help farmers with is just reviewing their budget, reviewing their working plan. We all know that things are looking really positive on the income side out there, and I think it's easy and quite satisfying to jump in and update income. You know, whether it's to update the dairy payout, putting in your lamb price at $8 something, or the beef schedule at over $6. What's kind of more time consuming and perhaps doesn't get done as often is updating all the expenses. Think of things like fuel, fertilizer, wages, interest. I was at a local industry update here in the Wairarapa the other day, and for sheep and beef on a model budget of 8,000 stock units, the increase in prices equated to about 100,000 K increase in income, but the increase in expenses, including interest, was 84. So, I think we have a role to play to help farmers not just look at the top line, but look at, well, what does this really mean for surplus? And on the dairy side, it was similar. Income was up 140, but expenses were up 70. Okay, over the page, Juliet. I always say bankers like a no surprises policy, but I think farmers are the same as well. And I had clients who used to say, Lawrence, we don't like paying tax, but what we really hate is a big surprise, when it comes out of left field. And tax planning, I call it PAYB, pay as you budget. Yes, you may not have to pay the extra tax from a higher income until terminal tax date, but I found a lot of clients were quite happy to pay voluntary tax so that they were paying the tax in the year that they earned it. And that way, we know what's really what is really a true surplus. No surprises, working capital. I've travelled around the country with bankers around terminal tax date, and they've received a whole lot of phone calls to approve emergency overdrafts to pay tax. That's a black mark against them, and I think it's a bit of an indictment on their relationship with their accountant. Geordie's going to talk more about opportunities, but I think if we're talking the same language, we've got accurate information, then we can help farmers to identify opportunities and perhaps help prioritise them. More and more, I find good accountants are sort of quickly dealing with last year's result, and they're really looking forward. They're focusing on the budget, the year ahead, and the opportunities. By looking at the same reports which the farmer has generated, I think we can have a more of a team approach. And what it means is that we're more likely to get invited out on farm. I think a lot of accountants say to me the best discussions they have with farmers is out on farm, whether it's on farm or it's at the office. But if we're dealing with reports that everybody is comfortable with, I think the conversation, the quality of the conversation is a whole lot better. So that's it from me, Juliet. Over to Geordie.
Yeah, no, thanks for that, Lawrence. Really interesting to hear about the current issues farmers are facing with those increased costs in their business, and how important it is now to make sure that planning is really accurate, and also that golden rule about making sure you budget and code your stock as the opening stock code. It's really important. So this leads into Geordie, who's going to help us learn how to harness our information and realise those opportunities. So I'll just hand over to Geordie now.
Kia ora koutou. Yeah, good to be here, and I just want to do a quick shout out to Lawrence Field. I've facilitated with Lawrence many a time, and this is the first time I think in history, and I'm not that much better, that Lawrence has finished inside the allotted time frame. So big dibs, Lawrence. I probably owe you a coffee for that one. Cracking into it. So just a little bit of background on what I do. So most of the work that I do is operating in the strategic space, whether it's one-off strategic planning for a business, which includes succession planning, which is probably more an elongated strategic planning process, or an ongoing governance where I work with clients on an informal basis, where we have our times of the year where we take off the overalls and talk about the strategy, where the business is at, where the business is going. So in that work, and then also with some clients, I also operate in the budgeting space and financial space, and by default, when there are opportunities on the table for people, it means I'm invited in to support and be part of that process. So in terms of being ready to take your opportunities, so the first one we've got up there is good quality and timely information, and that really comes from what Lawrence has just talked through. The quality and timing of the information is about those processes that are in place in your tool of choice, so Farm Focus. The systems you have in place to make sure that you're capturing the information as it happens, We as a firm sort of flipped over a lot of our clients that we deal with to Farm Focus probably after this financial year, so we are quite new into it, but we definitely have noticed the people doing the coding and that side of it. It's become a whole lot easier to get good timely information in the system reconciled. As Lawrence has said, having those invoices, those kill sheets in there means all of us as professionals have that ability to just do a quick check or understanding of some things. So good quality, timely information, being up to date. We never know when that opportunity is going to arise. Right now we're in spring farm selling season, and in the Wairarapa there's a huge number of farms on the market. I'm not too sure about what the marketplace is around the country. And also in the springtime, farmers tend to be really busy, whether you're sheep and beef or dairy or in a tractor, cropping, that sort of thing. So the two kind of don't go hand in hand. And so what I'm trying to impress here is having that information up to date all the time means that you're always ready for that opportunity. So when that farm comes on the market and you are in the middle of cropping or in the middle of docking or at the tail end of calving into mating, you don't have to spend a whole lot of catch-up time dredging through all the bits and pieces just to be able to, as Lawrence said, in a 3-4 hour meeting. Sometimes you use most of it in the detail. You might only nowadays have 4 weeks on a tender process. And if you're spending the first 2 weeks of that dredging through information, trying to get it all up to date, so then you can have the basis of a decision, you're missing a lot of opportunity to really work out whether it's a good opportunity for you or not. Also, that simple overdraft increase, at the moment, peak overdraft time, maybe not in Fonterra land, but if you're trading lambs this season, it's not uncommon to have $1 million plus worth of livestock all getting sold through October, early November. If you do pop over your limit, it might, the bank manager needs a reason, and to be able to easily articulate that to them without having to stop work. If your information's up to date, the job's done, your relationship's strong, you're able to buy that extra stock, or you'll be able to make sure you can pay your bills on time, which is critical. So really good quality, timely information means you can get what you need at the time. You don't have to stop work to do the catch up, and it means you can grab opportunities or maintain relationships. What is an opportunity? So yeah, when you think about defining something, I always cheat and go to the dictionary. So an opportunity is a situation or condition favorable for attainment of a goal. So to know if something is an opportunity or not, the prerequisite to that is making sure that clients, businesses first understand what is their vision, what are their goals, where are they trying to go. Once you've got that in place, then when options come up, opportunities come up, it's very easy to understand or ask yourself the question, is this going to take me closer to my goal, or is it going to take me further away from my goal? Thinking about the information in Farm Focus, those opportunities may be within the farm gate. So as maybe prices decrease or climate changes during the season, and at a time like this, if you are starting to see a few of those signals, to have that information there and to look at it and say, well, what are my levers that I can pull? If you're not on time and operating real time in that space, you might have that January, February catch up, and you might go, right, where are we? And yep, we've got our stock numbers. We've got a good picture to the end of the year. We've got production to the end of January, and you'd go, we got a pretty good picture to the end of the year. But you may have made decisions in that springtime that you can't go back on. Now, some of them you may not have had too many options, but in a business where people are making real-time decisions and they've got levers to pull, it's critical to have that information in front of you when you need it, so you can think, righto, prices are dipping. We can actually defer some of those things to the autumn, and then if we can afford it, we can afford it. If not, we can't. Likewise, maybe prices are going up, and maybe there's an opportunity to add a bit more marginal cost feed into the system, which makes more money, or maybe there's an opportunity to put a little bit more investment into some areas that you're thinking about doing. So just really about having that information there, understanding what an opportunity is, understanding what your goals are, where you're going, which leads into that making decisions. So making good decisions really is based on having a clear vision and strategy and having that good quality information. When I first joined banking 20-ish years ago, one of the first things that we learned is that all decisions are made by emotion, and they're backed up by logic. So the first thing that we have is the emotion that drives us to buy the farm, to buy the red car, to buy the tractor, and then we go about a process of putting a whole lot of logic in place to justify the emotion. So again, what the quality information does is that as we go through that process, and I'm not denying the emotion, because it's an important part of what we do. Lawrence called it the passion, but it's about giving it some balance. If we made all our decisions based on that emotion, then we would, who knows where we'd be. Some of us tinnier ones might do pretty well by bringing in that quality information. Therefore, we can see the implications of acting versus not acting. Yes, we might want to buy the neighbouring farm, and yes, it might make a whole lot of sense, but based on our understanding of our business and based on the values and the interest rates, maybe the risk at this point in time is too great to do that. So the better the information, the better the assumptions that we're able to rely upon. Cash Manager has had it forever, and it's continued into Farm Focus, is the trends report. Being able to run that history and trends report, I really use a lot when I'm looking at cost structures. It's cash based, which is quite important. We can all strip a bit of capital cost out of our operating costs, but to have a report like that where you can say, this has been our expenses for the last 5 years. Now we're going forward. The quality of that history, the richness of that history, really improves our assumptions. If we're varying from it, we've got to make some really calculated judgments about why we think we can do things differently. So that that historical information is critical. The assumptions that we make, and look, when we're taking opportunities, innovating on farm, leveraging or expanding our business, it all takes assumptions. We've got to back ourselves and work out what we think we can do, and we all know this right here and now, because we're in a COVID state whereby the assumptions and the information that is getting relied upon is having massive impacts on businesses and on people and on children. So it's the same and different. The weight of that COVID modelling and that COVID information is huge. Bring it back to our own personal situations and our businesses. The assumptions that we use, our understanding of our business, really is critical to the decisions that we make. Being the owner of your own business, so clearly clearly, our clients mostly do own on paper their own businesses, but what I'm saying there is you can own your business on paper, but do you own your business in terms of the decision making, in terms of the information, so that you're not sort of deferring to others, blaming climate, blaming markets, blaming the advice you got from someone once upon a time. You utilize people, you utilize information, and you make your decisions. A little bit like in the rugby space, there's the assistant referees, the referees and the assistant referees, or the whatever they call the bunker, the one upstairs. You know, a good business owner, if they're a referee, is saying, give me a reason why I can't award the try. I've seen a try, I've made my call, I'm in the right place. Give me a reason why I can't award that try. A business owner that maybe is not on top of everything might go to their assistant referee and say, try yes or no, and ask that assistant referee to look over all the footage and come up with an answer, try yes or no, because they don't have, you know, they weren't in the right spot, they don't have the right information in their own hands to be able to make that call. So being the owner of your own business is really about, you know, your business better than anyone else. You've got your information that you need to hand. So when an opportunity comes up, depending on the level of risk in that opportunity, you can either get on with it with confidence, or you can go to your professionals and say, here's what I'm thinking, here's my justifications, and your support crew, your governance crew, your trusted advisors are able to easily discuss with you, challenge you, and either support your decision or maybe bring you away from your decision if they raise some good points. So that brings us to that, having the key stakeholders on board. So again, these businesses that have good quality information, it is much easier to have a group of trusted advisors around you. We've heard from Lawrence about that relationship barrier that can occur with accountants, with bankers, with consultants. If you dish up poor information to your professionals and the people you're asking for support, then it's going to be really hard to build a trusting relationship in that space. So in terms of who you have around you, who businesses should have around them, they should have people that they're going to listen to. I always say, as people talk about putting a board together or doing things like that, is if that person gives you some honest feedback, are you going to listen? And if the answer is no, I say, well, don't bother bringing them around your board table, because unless you're going to listen to them, all you're going to do is pay them a great hourly rate and keep their business going and not actually do much for yours. So for myself, for yourselves, the accountants, positioning ourselves there is about adding that value, so that people think, yep, I want to hear, when I'm doing something important, I want to hear what that person's got to say. Again, as accountants, that support role in making sure that this information is good quality, that it's on time. And then the other part of having the key stakeholders on board is making sure that they have the full picture. So if as an accountant you are brought into the vision and the goals and all that sort of thing, then you're much more able to support them in what their accounts need to look like, what their management accounts look like, and all that sort of stuff. And absolutely, I believe, and not just because I do it for a day job, but the power of having trusted advisors around you is critical, both in the on-farm stuff, that second opinion for these guys, but also in the strategic, the governance, the higher level stuff. Right, next slide, Juliet, and we'll talk a bit more about how Farm Focus can fit this bill for us. So when I look at a business, there's 5 questions here that I ask, and we ask as with the business around a governance table. Are you making progress? So is your business going forwards or backwards? Sometimes you might have cash in the bank, but it doesn't mean you've gone forwards. There's all the vagaries of the livestock, of the creditors and the debtors, of the extra investment that you're putting into the business. So we need a way to cut through that and understand we're working bloody hard. Are we actually going ahead? The second one is, are your facilities sufficient to manage to the best plan? So I'm a real fan of farmers being able to farm the farm and not the bank account. Sometimes I understand that the risk position of a business means that that's a privilege that they don't have, but it still really guts me when I'm seeing things happening on farm, feed not being bought, livestock not being bought, all things which will create profit that are not happening, or livestock getting sold, things that are happening for bank balance purposes and not for profit purposes. So we need to know, are our facilities sufficient to do what we need to do? Are we on track? So we set a plan at the start of the year. How are we going now, either 3 months in, 6 months in, whatever it is? How's our production? Is our production where it needs to be? Is our physical farming efficient and delivering what we need from it in order to make the profit and make the progress? And what are we investing in? So in terms of, I'm sure you've all encountered backwards budgets, or upside down budgets. That capital, either on farm or off farm capital, that investing in ourselves in terms of our family drawings, lifestyle, the things that we want. What are we investing our surplus, our free cash in? So I'm going to quickly now, Juliet, if you whiz us through, match 5 reports out of focus. As I said, it's been, while I toyed in focus a little bit as it was developing, we're really only doing our first round of budgets with people right here and now. So effectively answering these questions, jump on economic farm surplus, Juliet, and I'll and maybe just scroll down that one a little bit till we maybe revenue at the top. Perfect. So like with Cash Manager Rural, the Farm Focus gives us the report, the EFS report, Economic Farm Surplus report, that gives us an adjusted livestock adjusted income. The addition in the new one is that it's got all these columns, the per stock unit, the per hectare, the per kg of milk solid, that just allows us to break it down a little bit more. So if you can go down one more bit, just so we see the revenue total. So there we can see a business that has an income of just over $1 million, $1,028,000, or $1,150 a hectare. And in there, midway up that adjustment line, shows you that there is $277,000 worth of adjustments, so a reduction in the value of the livestock on hand. So really critical. If we hadn't have had that in, and when I first ran this report, this is just the sheep and beef demo and Farm Focus. The livestock values weren't in there, and I was looking at this business doing $1,500 a hectare and really impressed with it until I spotted that we weren't getting any adjustments. So really easy to get fooled by seeing cash flow and not having the right adjustments. Scrolling down, Juliet. Touch more. Yep, that'll do us. So then we've got expenses. We know what they all are, so we don't need to dwell on them on the way down. 565,000 worth of operating costs. Maybe just go up a little bit, Juliet, Yeah, a little, I was just going to say R&M there, repairs and maintenance. So the first thing I looked at, just for a bit of a story in this, is there a whole lot of extra work going on? And I look at that and I say, no, there's not. $3.60 odd per stock unit, I think that line is. So there's not a whole lot of extra stuff going on. It's a reasonably efficient cost structure. So if you scroll down again to the economic farm surplus, what this report can do, if either business owners or their accountants or support people understand it, is we've got this place for adjustments. So if someone has done a significant amount of repairs and maintenance of fertilizer, or I sometimes do a bit of a fudge when I need to because there's only that many columns, we are able to take that out, and your farm focus really is a management accounting or management reporting space, so that we can get an economic farm surplus that tells us our overall performance if we take away those one-offs. Now, like I said before, there is danger in that. We've got to be sure, and this is where our accountants and others can challenge us. Are those things one-off, or are we spending that more often than not? Therefore, it's possibly maintenance. But within that, there's the discretion to work that out, and also include that depreciation, because that cost of gear is real. Scrolling down a bit more, Juliet, we might get to the bottom yet, or just keep that operating surplus on. So then, as Lawrence alluded to, you take away your interest and your rent. If you've put a depreciation figure in there, then you have gotten yourself to an operating surplus or a net profit before tax. And the only thing I would, if I'm sitting with someone and saying, has your business gone forward or backwards by, depending on if they've paid themselves a wage in the cost structure, I'd be chucking in a management wage, and then saying effectively you have, this is the number that your business has gone forward or backwards by for the year. Non-operating, and I do quite like the way that they've got this down here in farm focus. It's then very clear that that's separate. It's non-operating, and it covers your purchase and your sale of assets, your principal, and your drawings, living costs. Awesome. So yeah, it gives us a first question: are we going forwards or backwards, making progress? Then have we got the facility we need to meet our cash flow needs? Yep, jump onto that one, Juliet. You could jump that up. Now, in all honesty with this one, and right here and now, the place I start is at the bottom. So if you take us all the way down to the bottom, obviously when you're building it, you're going through the detail and getting it right. But here we look at this one, and is our facility sufficient? Well, it doesn't look like we touch the sides on it, so we can sit there and say, no problem, it's sufficient. Probably we need to talk to the bank and say, what options have we got to better manage our cash flow? So again, it's a great positive conversation. The third question is, are we on track? So if we jump to the variance, and so we've got the actuals and the working, our changing budget with what we set out at the start of the year, and then our variance. And I've done this on a whole year basis. Two ways you can do it. You can do it on the year to date and look at a term and say, where are we at year to date? I do that sometimes, but I quite like to look at it on the whole year basis, because the timing thing always gets me. You can run this report now and you might be $400,000 out on something, and what do you know, you did put fertilizer on and you didn't sell those 3,000 lambs, and therefore your actual variance is sort of a little bit hard to read. So once you've revised the budget, I then do a whole year variance. And this is telling us that at this stage, not much has changed on the cash income basis. So again, this is a cash income. It's not adjusted, so there's a little bit of a risk in there, but still good to know where we are cash flow wise. and keep scrolling down, Juliet. Yep, hold there. So I jumped the gun a bit there. If you go up a touch, Juliet, the net income is actually up 110,000. So what I was talking about was the sales. Once you take purchases into account, the business is up by 110,000. Farm expenses, probably a really great place for the variance. So the budget was 655,000, and now we're down at 568. Really important as we're doing these variances that we are not forgetting about some expenses that we might have had in the budget, not spent, but they're still going to come up in the future. So we've got to really encourage our clients to go back and look at what that budget was, and anything in there that's still required has to get pushed forward. Otherwise we can, like this one, hopefully it's right, but sometimes we think we're all well and good with our farm costs, but we eventually have to spend some money that we forgot about. Down to the bottom, I think, from there, Juliet. Interest and rent, normally we get that one pretty right. Oh, this case we got an interest rate reduction, so that's good news. And down to the very bottom, so overall at the end of all of that, an improvement of 245,000. So we don't see that all the time. Probably we do in Fonterra budgets right now, which is positive. So yeah, really critical. Are we on track? But again, assumptions are all important. If we haven't revised the budget and we haven't pushed our stock sales or our production numbers around and our expenses around, we run the risk of this report having no value. Production, so then we'll jump to livestock trading. Now we're sort of a sheep and beef focus here today, but absolutely conscious that dairy has got a significant number of farm focus users, and with dairying, it has pretty much the production side of it is in that dairy forecaster, and you can also bring it through a bit in the EFS report. I like, in terms of sheep and beef, this livestock trading report. If you scroll down so we can just see that livestock position, yep, there. Because it gives us our opening and closing livestock and our values on one page. So we straight away know what that 277,000 reduction in livestock is all about, which, if you go, just give us the opening ones again for a second, Juliet. Up a little bit. So it's the autumn trade lambs. There we are, 1,200 of those at 125. That's a big chunk of it. So we can really clearly see what's changed. And for farmers, we put that down, and is that right? Is that not right? It's a bit of a big flag if they say, well, that doesn't sound right. We know we've got to just double check it. Sometimes they just haven't quite grasped the size of the change. Then, go up a little bit again, Juliet. One more click. So then you've got that carcass weight column, which isn't entered in here as yet. It has been in Cash Manager Rural for some time, but it really is a space, and not all farmers will use it, but those that do have a weight on their opening and closing livestock and weights on their purchases and sales. Pretty much that production job is done and taken care of. Again, dairy farming, it gets emailed through. It's on your phone by pickup time, so that's nice and easy. But in the sheep and beef game, it can be done in here. Down to the sales side. So then below it gives you your sheep transactions, sales and purchases. And so you can see there your average prices and your average purchase prices. Doesn't look like things are quite tallying up there, but it's all, again, good information in, good information out. You're able to really see how well things have gone. And your production per hectare, if you filled in all that, all the carcass weight info, you can get a good number on that. So a good one for understanding production and how it's going. The last one there, cash flow detail report. We'll just jump to the next one, Juliet. So I always say, well, where are we investing our money? We have to do that question above about whether some of it's already been spent in the farm working expenses, and we might need to pull some of that out just so we can see our business clearly. But if I take the cash flow detail report, you can really easily go to the view and click the codes you want. I can see that these guys have spent 150 grand on plant, which is the upgrade of a tractor, and 26 grand on the upgrade of a side-by-side or four-wheeler, and a little bit of development expense. So total investment there of 190,000. And if you scroll down, loan repayments, 100 to the bank, 10 grand to HP, and drawings of $40,000. So if you're thinking about an upside down budget mentality, and if you're at the end of one year and looking towards the next year, this is the place where you might start, and you might go, right, 100 grand to the bank, that's a must. We did that tractor last year, so we don't actually, in the four-wheeler, so we don't need anything in the plant space. Maybe $25,000 worth of just contingency or whatever it might be. And drawings wise, we know what our drawings are. Maybe next year's the overseas trip. Maybe next year's the start of private schooling. So, where are we going to invest our money? So this is these non-operating spaces. Job done. So yeah, that's pretty much my approach to it. And yeah, so far with Farm Focus, and even just using this demo here, pretty easy to answer those 5 questions, subject to Lawrence's session, getting that information in, accurate, up to date, understanding the inputs, and makes my job, and I'm sure your job, a whole lot easier to add value. Thanks, Juliet.
Well, thanks, Geordie. Really, really interesting to hear your piece there, just about having that tidy and timely information so that you can see those opportunities and make the right decisions, and also be able to involve your team on making sure you're reaching those goals. And then those 5 key questions to ask any business, and then how we can see those in the reports. So it's really great. Thank you. I think Lawrence, we're just going to jump in there.
Yeah, thanks, Juliet. I thought just before we get into questions, it was worth just highlighting the awesome support that does exist at Farm Focus. So look, and this is for both clients and for yourselves, for your own staff. I remember the old Banklink people used to say, if your staff are spending more than 5 minutes trying to work out how to do something, pick up the phone. So, in Farm Focus support, there's live chat, there's email, or, which is quite uncommon these days, there's real people at the end of the phone on the 0800 number. So, just pick up the phone. And what I find is that they absolutely know their stuff. They talk in plain English, they don't make you look stupid, and they understand farming. A lot of them come from a farming background. So the support is awesome, and chances are, whatever you're struggling with, somebody else has been through it before. So, why reinvent the wheel? Absolutely encourage you to use the support team.
Thanks, Geordie. Sorry. All right, well, there's a few questions here from Alan. How are you tracking and reporting weight gain from grazing, and how does this impact your farm productivity? Does flow to the EFS and flow through to your balance sheet?
We might have to follow up on that one, Juliet. Yeah, I know.
I can come back to you, Alan, on that, on just how to record those on and off grazing, and making sure you're tracking the weight gains as well of those. So I'll just come back to you on that, Alan.
Yeah, I think that's best because I know
more
some
of a
businesses,
technical one.
yeah, have a lot of, have a big part of their income comes from perhaps heifer grazing or growing out hoggets. And so we'll come back to you and we can circulate that in terms of some good ideas on that.
And then we've got a couple in the chat bubble here. Hi from Mike. Good. Oh, okay. Yeah, we'll get a recording out to you. The wool line needs a subtotal, even though it's only one line. Okay. Wool is a heading for the cattle. Okay, these look like a couple of Sally. I'll come back to you on that too.
Just a point,
Yeah.
Juliet, it's worth mentioning, isn't it, that when you're in Farm Focus, right down on the bottom left, there's a little button which is feedback. And so some of these things that are coming through are suggestions or enhancements or feedback. And I really encourage you as users to lodge any suggestions that you've got or to vote on existing suggestions that are in there, because like anything, the more people request it, the more it'll come up the priority list and we'll get things improved. Yeah,
no, thanks, Lawrence. Another, just a point on that wool, a lot of people like to see the wool income excluded from the sheep revenue or included with the sheep revenue. And the great thing about the Farm Focus coding system is you can allocate those to whichever KPI group you want them to be a part of. And you'll see that through in your EFS report. So yeah, just for the wool, some people want to see it in with the sheep total or excluded on its own. So depending on, I guess, how much money you're making out of that activity. Yeah, but do we have any?
I'll throw my 2 cents, Juliet. I like it in the sheep because it is part of your sheep income.
Yeah, no, fair enough.
And it's a similar point with shearing expenses. You know, some people like to net off the shearing expenses off income, but I think what would be more common and is more industry standard is that your shearing costs are part of your farm operating costs. Because that way, if you're looking at your costs per stock unit, percentage of income per hectare, that's a realistic figure. And it's just sad at the moment that they exceed the returns from wool. But my preference is to have them separate. But again, you've got that option.
Oh. Do we have any questions for Lawrence and Geordie around their content today? I'll come back to you, Sally, around those couple of technical questions you put in.
Must have done a good job, Lawrence.
Yeah, no questions.
George did ask in the chat about tax. I should have known. George would ask, is there no tax? Not in the dreamland of the sheep and beef farm demo, George. It's the one place where we don't have to pay any tax.
Hey, if there's no further questions.
No, well, there's we've recorded this session, so we will put it up onto our help centre for you guys to listen to again if you need to, or pass on to any colleagues if you need. But no, thanks again, everyone, for joining us today. And yeah, we hope to continue this into the future as well. We hope that you found it really valuable. All right.
And Juliet, just a point that there is essentially a repeat of this webinar on next Monday, isn't there? Monday the 15th.
Yeah, Monday, so 9 a.m.
9 a.m. So if any of your staff would like to catch this, then that's another opportunity.
All right, thank you. We'll end it there.
Sign off.
Thanks, Juliet. We'll see you all later.